Thanks for being part of the show today. This is the Market Report on ADB. My guest already joined me by Zoom. A very good day to you, Professor Salim. Okay, we are expecting a connection with Prof. Okay, we are expecting a connection with Prof. And you'll be joining me so that we can explain with the issues around the MPC meeting that is coming up on the 19th of February. What are the expectations of Nigerians? Economists have been saying one or two things around the expectation that they are expecting a maintenance of the status quo, and they're also expecting maybe a hike or a reduction. But what is the expectation of the majority of Nigerians in this regard? Because when you talk about the MPC meeting, that's a major decision about what will happen to the interest rate will be done and what will happen to cash reserve ratio as well as liquidity ratio that show the extent of how much money flow in Nigerian economy. Professor Ringim, a very good day to you, sir.
Good day, Mr. Adefonari.
All right,
thank you. Good day, viewers.
All right, sir. Thanks for joining us today.
It's good to have you. Thank you very much.
All right, so let's go straight to our discussion. Prof, what's your review?
Yes,
what's your review of the Nigerian economy in the last 1 year? Let me just say 2024 precisely.
Okay, actually, when you look at Nigerian economy in general in 2024, the challenges were really much, and most of the policies that were done by the federal government through the fiscal policy and those by the central bank are actually anti-people. This is my general review about it. Because looking at the monetary policies, some of the monetary policies are actually good when it comes to issue related to exchange rate, because we can see the effects. At least now we are having a stability in this first quarter of 2025. But last year, the performance was really bad because Naira depreciated by around 40%, which is not healthy for the country. Yeah, and other policies, like majority of the policies regarding the monetary policy, it's if you look at the currency reserve ratio, that is the cash reserve ratio, actually, it was really bad too, because now currently our reserve requirement for the cash is around 50%, which is more than that of any country in the world. It's only Argentina that is approaching Nigeria with around 40.9%. But looking at other countries, if you look at US, their reserve requirement is zero. Because let me give a little foundation about what really enhance economic growth. All these policies that we are seeing, both monetary policy and fiscal policies, are just stabilization measures. But the main variables that enhance the economic growth is investment and saving. And if you look at majority of the policies done by the central bank, they are just focusing on the inflation rate, trying to adjust the inflation at the expense of the interest rate. And interest rate is what brings about investment in the country. So now our interest rate is way high, and that really discourages investment because there is no available funds for the borrowers to borrow and invest in the country. So why would we be doing a policy in the expense of another policy? And looking at the current situation in real terms, both the public and the private, our savings rate is very low because we are not saving despite the high interest rate, but that does not encourage saving because inflation has already crowded out all majority of our income. So there is even no room for savings. So what we need to do is at least to stabilize the interest rate and take it down so that we can encourage investment. And looking at, if we look at it from another angle, you will see that the policies, what even leads to this high inflation, we already know what leads to the inflation is the deregulation in different sectors, more especially the oil sector. The removal of fuel subsidy is what leads to increase in the inflation. Then why not? At least we can reverse this policy, because if the policy is not working, and people are suffering from this, and even the government too is suffering from this, then what should we do? We should at least reverse the policy or have a look at the policy again. Then why should the central bank be trying to adjust this inflation rate at the expense of the interest rate? So if you assess it, assess our economic performance for last year, actually it is really bad. It's terrible. But at least we have started seeing some improvement this year, and this due to some of the policies. Yes, so this is my general perception about Nigerian economy last year. And hopefully the MPC is about to meet, so most probably they will come up with something positive. We are optimistic.
Now,
but for the central bank, at least we should give them benefit of doubt, because we have not given enough time to see their performance. Yeah.
Now, Prof, talking about CBN and talking about Yemi Cardoso, the leader of the CBN management right now, he took over in 2023, October precisely, and when he came to power, he made mention that he's shifting his focus from heterodox monetary policy to orthodox monetary policy, which have given him the opportunity to jack up the interest rate over time, more than 6 times now. You get it. So, from your own perspective, how do you see this particular CBN led by Cardoso in present Nigerian economy?
Yeah, that's why I mentioned that earlier we have to give them a benefit of doubt, because they just started October 2023, and now we are in February 2024. But as I mentioned earlier, actually the policies are not healthy for the economy. When you look at the policies, talking about the cash reserve requirement,
okay, we are expecting a connection with Prof. I think from what Prof is saying is that in as much as the CBN policy has some lag behind in terms of challenges that it has created, they are seeing the light at the end of the tunnel in 2025, talking about the improvement that the policy of the government is bringing on, as well as the changes that the policy of the government is also bringing on. I want Prof back. I also want to ask him on the aspect of the expectation of movement. Oh, you are back. Go ahead, sir. Go ahead, sir.
Yes. Okay. Okay. So what I'm trying to say is that if you look at the monetary policy rates, it's very high from last year to this year. But what we are looking at, this monetary policy, the rates at which it's going, is it going in a positive direction or a negative direction? That is what we need to look at. Now, we are projected to have a GDP of about $1 trillion US dollars in 2030. That is the projection in the next 5 years. But what was our GDP last year? It's just about 368 billion. And as I mentioned earlier, you need to encourage investment and saving in order to achieve this economic growth in the long run. So the policies they are making, are they really enhancing this? Are they really stabilizing the way that we can achieve this projection? No. Looking at our interest rate, it's very, very high. You know, nobody is interested in taking loans now because of the high interest rate. And the saving too. Who can save? If you look at common Nigerians, you know, we are just struggling on how we can even survive, how to get basic necessities. So for me, CBN alone making monetary policies to stabilize the inflation rate is actually not healthy for the country. So the government should come up with some policies that will really, fiscal policies that will really stabilize the inflation rate, even if it will take us to bring back regulations in our markets to do so, at least to improve the economy.
Prof, I really love the way you put it. Government must come out with another fiscal policy as a way of marrying the monetary policy to bring about the stability of the Nigerian economy. So a lot of people have asked the question. Even CBN himself have come out to confess that most of the challenges that we are having in inflation, interest rate, and the rest of them come as a result of pressure from other sectors of the economy in this regard. So in your own understanding, how can these two policies come together, fiscal policy and monetary policy?
The issue is we are always getting it wrong. Wrong in the sense that you cannot do two policies at the same time in order to control one issue. So if you are going to focus on monetary policy, then you should do a monetary policy that will end the problems we are having. And if you're going to do fiscal policy, you have to hold monetary policy constant. Because when you are doing two policies, we assume that the central bank is independent. So if the central bank are doing their own policy, and at the same time the government is also doing another fiscal policy, and let's assume maybe they are going in a different direction, that can overheat the economy and we can end up having a crash economy. So first, you have to look at the situation you are having in the country first. So look at our current situation in Nigeria. So looking at the situation, then we will now look at which policy should we work with. Because as we can see currently, I think monetary policy is not working with inflation adjustment in Nigeria. So we have to come up with some fiscal policies. The government should try as much as they can to invest more in investment, both public and physical investment, create jobs, and so many other variables that will enhance the economic growth. And then the central bank should focus on controlling other issues because we have challenges with exchange rate. At least now we have started stability in the exchange rate, and the policies that they are doing is good at least because if you look at the deposit of dollar as a collateral for Naira loan, they have stopped that, which is really a good policy that will reduce the pressure on Naira and other policies that the central bank are taking. So they should focus more on how to stabilize the exchange rate and the interest rate and allow the government to do policies that are related to inflation because we all know what leads to the current high inflation we are having in the country. So the government should focus on that. So the government should do the fiscal policy in regards to inflation rate, and then the CBN will be left with other monetary policies that will enhance interest rate and Naira stabilization.
Now, talking about Naira stabilization, I just read on my report today that Naira has not really gained much today. At the official rate, it is 1,507 Naira to the dollar on the CBN website. But on the parallel market, which is the black market, we are seeing something very, very far from what the government is targeting. But away from that, now the concern now is about the interest rate expectation because on the 19th and on 20th, CBN must come out with an interest rate. Either they maintain the status quo or the hike or the reduce. But in your own view, what is your own expectation? Do you expect them to maintain the status quo at this point in time with 27.50, or you expect them to come down, or you expect them to go up? Because some analysts have said hiking it also empower financial derivative, people who are into fixed income and the rest of them. So what's your view on that?
Okay, my view actually, for me, I think they should reduce the interest rates because reducing the interest rate will give room for borrowing, and that will enhance investment. I keep mentioning investment because investment is the major drive for economic growth. When there is investment in country, it means productivity is going to increase. When there is too much investment in the country, it means jobs will be created. So many variables will be affected. So in my own view, the MPC and the CBN, they should try as much as they can to come up with an interest rate that will be healthy for the economy, that will enhance economic growth. We already have a target, and this projection is set by this current government. How can they achieve that? But looking at the way our economy is moving, it's going to be difficult actually to reach that target of 1 trillion. And now looking at the tax reform too, when you have high taxes, it's also affecting the interest rates. So we are trying to come up with policies that are going to increase the tax in the country, and at the same time, our inflation rate is going high. So now with the current tax policy, and if the CBN and the MPC decided to increase the interest rate or maintain it at the current status quo, then definitely it's going to be challenging for the country.
Very interesting, because as you rightly pointed out, the challenge is to avoid the challenge, CBN must reduce. But on the other hand, there are people who believe that it should be maintained, and there are people who believe that it should be increased. But away from that, another very critical aspect of the MPC decision come on the 19th and 20th of February is the cash reserve ratio. You very rightly mentioned that earlier in your discussion. 50% is quite very, very huge. I think early this year, some economists that I met on my platform here and other fora I had the opportunity to discuss with them. They said CBN should find a way to even bring that down. Do you also do you support that argument that they should bring that cash reserve ratio down?
Of course, if you look at just look at the analysis of all the countries in the world, it's only Argentina that is approaching Nigeria with 40.9%. And then there is another country with 20%, I think, in the Middle East. But the majority of the countries, the reserve requirement maximum you see is 10%. Because now, if you keep holding the reserves, it means that there is not going to be much money to circulate in the economy. And what matters, what leads to about increase in economic growth is the GDP. And what matters is the rate at which money is circulating in the country. So now we are holding 50% of our deposits. That is really not healthy for the country. I think, for my own opinion, in order to improve the general economy of Nigeria, at least our reserve requirement should not exceed 20%. At least with the situation we are facing.
Exactly. Prof, I will tell you to your face now that you are among the majority who are asking that the cash reserve ratio should reduce. But there are also people who also believe that this is a way of safeguarding the banks so that uncertainty that normally happen in the financial sector will not affect them. Won't you tilt to that aspect also because of the uncertainty in the financial sector? If you allow the banks not to owe much money, it may cause some problem, particularly with what they call the unfunctional loans or loans that are not good enough, that could not come back to the bank or come back to the economy, that are borrowed for political reasons or for other schemish activities that doesn't have anything to do with the economy.
You know, the central bank have already come up with a policy of that is increasing the capital of banks. That is why very soon we will see some mergers and acquisition of some banks, and we will see some kind of change in status. Some banks will drop to regional banks, and some will maybe move to the level of national banks. So we will see all those. So all that measures are also good because the central bank is trying to make the banks, the commercial banks and the merchant banks strong, at least. So when the banks are strong, and there is stabilization in the banking sector, then this, in reducing the reserve requirements, will not affect the economy. It will encourage borrowers, to borrow and invest.
Very interesting. Now, Prof, before I let you go, we need to advise the government on certain policy they are bringing out. So what will be your advice to the policy economy of President Bola Ahmed Tinubu? We know he has done the subsidy remover. He has also done the unification of the exchange rate. There are other policies that are coming. You made mention of the tax reform. Let's encourage this government. Let's give them advice on the way forward on the economy of Nigeria.
Okay, the problem we are facing with Nigeria is doing policies at the wrong time. If you look at the previous administration of General Muhammadu Buhari, when they came in, our economy was one of the
All right, we are waiting for better connection with Prof. And as he rightly pointed out, some years back, Nigeria economy was doing fantastically well, but it also has its own challenges, as pointed out by Prof. But at this point in time, we need to advise our government on some of the policies they are bringing out. A lot of people are not comfortable with the tax reform. A lot of people are not comfortable with the fiscal policy of the government. But as government do say, most of these policies are necessary. And we normally say in local parlance, is it a necessary evil to correct some abnormality or a necessary good to correct some abnormality in the economy? And that's why sometimes government push for some of this policy to be out there. Prof. Salim, are you there? Prof. Okay, I think, all right, with this, I think very interesting from Prof. Salim, who has made us understand what he expects from the CBN MPC meeting coming up on the 19th and 20th of February. A lot of expectations are being awaited this meeting. One is about the interest rate that stands at 27.50% today, that many people are believing that is either CBN maintain the status quo or reduce it or even hike it. Then we have the cash reserve ratio that stands at 50%, that shows that all the money that banks need to keep, people are expecting it to either come down or increase. Then the liquidity ratio that controls money in circulation in Nigeria is at 30%. Many people are also suggesting that this should also come down, but others are saying they may see it going up. So these are the... Oh yeah, Prof, conclude so that we can conclude your thoughts, sir.
Okay, so you see what I mentioned is that you see we do policies at the wrong time. Now, moving back to President Buhari's administration, they did some policies which were really at the wrong time. When the country was about to fall into recession, what we should be focusing on then is how to do expansionary policies, both fiscal and monetary policy, in order to enhance the economy. But we end up seeing contractionary policies. And this is what is actually happening now with the current administration. You see, all these policies that we have been discussing about, if you look at them, they are tight policies. They are contractionary monetary policy and contractionary fiscal policies. And at this troubled time, the time that the economy is really not stable, this is the right time that we should be doing expansionary policies. Government should come up with policies that will, projects, that capital projects should be enhanced, that will create job opportunities, and that will create so many benefits to the economy. And central banks should also focus on doing expansionary policies. So my candid advice to the current administration is that they should remember that their primary priority should be Nigerians. So whatever policy, they should look at what is going to happen to the general public, that is the population at large, not only what is going to favor the government. So any policy that is really not going to be beneficial to Nigerians, I think they should just keep them aside. Because now we have seen removal of subsidy, there is deregulation in so many sectors. Now, looking at equilibrium, what does equilibrium mean in economy? It means a situation where everyone is happy in the country. So now we are deregulating our markets in order to reach equilibrium, natural equilibrium, which means we use the market forces of demand and supply to arrive at the equilibrium whereby everyone will be happy. So are we happy now with the current situation? The consumers generally are not happy. And the producers are not happy as well. So who is happy at this moment is only the government, because that subsidy was removed and the government is having surplus. But where are they taking that surplus to?
Prof,
we are not seeing the impact.
Prof, we will leave it here for today, and I know many Nigerians are looking forward to that day of happiness in Nigeria. So thank you so much, Prof, for being part of the show today. I'm so gracious to have you on the show. Thank you so much.
Thank you, Mr.
Olamileko.
Thank you very much.
All right, thank you, Prof.
I'm extremely happy to communicate with you and viewers. Thank you very much. Have a wonderful day.
Same to you there.